following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Hello, everybody. This is Mark Longo from the Options Insider Radio Network, and I'm breaking into your regularly scheduled programming to let you know about an upcoming event that I think is going to interest quite a few of you. It's called The Future of Options Trading, Finding Edge Outside the Pit, and it's going to be held on November 5th here in Chicago. This is the inaugural conference from the Options Alliance, a new industry trade association that I am privileged to be a part of. And this conference will address the numerous issues facing the fastest growing segment of the options market, namely options entrepreneurs. So who is this event for? Well, if you're a current or former market maker and you're looking for some ways to leverage that unique skill set in some exciting new areas, well, then this event is for you. If you're an aspiring entrepreneur and you're hoping to learn a little bit more about the options market, which is the most dynamic segment of the financial marketplace, but also can be a little bit intimidating, well, then this event is for you. And if you or your firm are looking to expand the reach of your products or services by learning more about the unique needs of options entrepreneurs and new startups and new ventures, then this event is definitely for you. We've got a lot of great speakers lined up covering a wide array of topics, including how to leverage that trading and market making mindset and skill set into other unique opportunities, also overcoming the typical roadblocks and stumbling blocks that may lay in the path of a new option startup or entrepreneur, and of course, perhaps most importantly, how to promote and market that new option startup or new venture that you're planning. Now, I've been to my fair share of options conferences, so I could say with some certainty that there's never been an event quite like this. Take advantage of this unique opportunity to meet with and learn from the entrepreneurs who are out there doing it, building new businesses, starting exciting new ventures in the options market. You can learn more by surfing on over to www.optionsalliance.org and then clicking on the event sign-up tab at the bottom of the page. A lot of people say that their space is limited, but we really do mean it. So if this event interests you, reserve your seat today. Thanks for listening, and now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call around here, the Options Insider Radio Network. You may have noticed I took a bit of a vacation over the past few weeks, but now I'm back and raring to do some option blocking. Let me thank Uncle Mike Tucson, everybody else who so ably filled in hosting for me last week. You guys did a bang-up job. But now I'm back in the saddle and raring to go. Really quick before we start, let me mention again at the top of the show, if you haven't had a chance to check it out yet, you should definitely do so right away and download our Futures Options Roundtable program. You can, of course, find it on theoptionsinsider.com optionsmarket.com or iTunes, Stitcher, Aha Mobile, wherever you get your finer podcast programs, it should be there. If it's not, let us know. We'll make sure it is. I think if you like this program, you're really going to like the Futures Options Roundtable, so be sure to check it out. And speaking of our roundtable today, it's a little bit condensed. Everyone's on vacation or scattered to the four winds, but I am joined by one other compatriot, my usual partner in crime, good old Mark Sebastian from OptionPit.com and Swan Wealth Advisors. Mr. Sebastian, welcome back to the program, sir.
Grazie. Good to see you. How's the world treating you, my good friend?
Are you seeing me? Did you activate that secret camera you have in my studio here again?
Yes. How did you know?
You let the cat out of the bag, sir.
Yeah, it's good to be here. The happy days are here again. So, yeah, kind of an interesting couple of days while you're out. You picked an interesting week to be gone.
Yeah, I missed a lot of fun action, which I think we will get into right now in the trading block.
The trading block.
All right, and welcome to the Trading Block. You guys know how this works by now. This is, of course, the portion of the show where we break down what was trading and what was moving the old markets. And it was a little bit of vacillation on the old street today. The market couldn't decide if it was a good day or a bad day, so it ended up roughly unched. Most of the major indices pretty much unched in any significant direction. The same also could be said for vol, which is interesting. Good old VIX Cash. At least the surrogate for vol that everyone uses, the shorthand, the good old VIX Cash, pretty much unched on the day as well. It was a big kind of shrug day. Everyone kind of figuring out what the ramifications are of this post-shutdown environment that we're in, how things are coming back, how the tapering and the easing is going to be worked out, how all that will play into the marketplace going forward. And really no one's figured it out yet, so we're kind of just staying in neutral for the time being. Of course, as Mark alluded to, I missed a lot of interesting stuff over the past week. We had Google earnings exploding through the roof. We had vol coming in like a crashing meteor. We had just about everything under the sun over the past week or so. A lot of good stuff to talk about. I mean, I know you guys hit on most of it, so we won't rehash all of it. But, I think just in general, the decline, shall we say, euphemistically, in the volatility is perhaps a good place to start because it was just interesting to watch it come off in kind of fits and bursts. It wasn't one massive one-day crushing. It kind of was a little bit here, and then a little bit there, and then a lot, and then a little bit more.
There was a bit of a one-day crashing on like Thursday when the VIX just got absolutely just pummeled. But you're right. It wasn't exactly like it was. Yeah, I mean, it was interesting because we did fluctuate a lot before we actually got the tanking that many people were looking for. So, yeah, kind of interesting.
Yeah, we had a few kind of sporadic drops in there. We go back a couple of weeks actually to when I think the first rumors were coming out that they may settle it. This is around the 9th or 10th, I believe. And we saw the VIX drop off about 20 or so percent. I know how it infuriates you to say percent of a percent, but c'est la vie. And then we kind of hovered again, then we rallied up again, and it got all the way up to around I think the 18.5 handle or so, and then took his lickings again over the next day, closing about 4 handles south. So that was probably the big. The one-day kind of move you're referring to. But we saw it even the day before and a little bit the day after. It kind of was a little bit more staggered than I kind of anticipated. I anticipated kind of all of it coming out in one massive rush. And certainly a lot of it did, but maybe a little bit more staggered than we've seen in years past where everyone's waiting for that one balloon to pop, as I like to say all the time. So what's been the takeaway from a lot of the old mentees and clients these days when they're looking at vol now? Are they positioning for continued stagnation? Is everyone kind of scratching their head? They think we're going to retrace some of these higher levels? What's their take on it?
I'm getting a lot of different views. Here's what I do know is everybody wants February and March vol, and nobody wants November. So we're seeing kind of the calendar spread get absolutely creamed. If you look at kind of vol term structure, it is steep. Let's just put it that way. The curve is steep.
So that's the old, I don't know what the hell is going to happen in the next few weeks, but sometime in the next few months, something's going to happen, and I want to be there for that. So let's gobble up this time spread.
Everyone's gaming for the next government shutdown. That's really what it comes down to. I mean, seriously.
We've stymied it for now, but it's coming back hard in a couple of months.
Exactly. That is the feeling everybody has.
not surprising that I think a lot of people are doing that. I think today's activity kind of playing into that narrative as well of who knows what the hell's happening in the near term, but in the longer term,
there was like a crazy trade that went up on Friday in VIX. A guy walked in and bought sold out. He had a big November position, sold it, and then bought 117,000 of the February 24-29 call spreads. So. Wow. Quite the hedge.
Wow, that's hedging / specking on some crazy business there.
That's a big trade.
That's serious business across the board, and perhaps a little bit wacky as well, which we like. That kind of falls under the unusual activity purview that we have here on this show. That's an interesting one. I don't know if I would call that a hedge or crazy business or a little bit of both. Probably more the latter than the former, I would think, but still. And interesting, just from a size perspective. That's funny. Listeners, if you haven't heard the Vol Views episode we did recently, it'll be coming down on the podcast provider near you very shortly. We'll be bringing that show back in the fits and starts here. But we talked about that with Russell Rhodes over there at the VIX, how people utilize that. And even he doesn't really see the upside as anything more than, in VIX, as anything more than like a kicker. And so this guy clearly putting on a pretty sizable kicker to whatever else he has lurking on out there. That's pretty impressive. We talked you guys talked last week. I wasn't here, but I missed the big move in Google. There was a lot of interesting activity in that one as well. I know the narrative in the past few quarters has been that the premium buyers kind of missed the boat. The big move happened in the after hours and then retraced aggressively, or at least partially, coming into the next session. So if you were long premium, it made it really hard. People were beating that drum for after hours trading, et cetera, et cetera. I won't go down that well again, but it was interesting to see that this time, at least so far, the premium buyers, it actually worked out. This time we saw Google closing around 888, open up the next session nearly 100 handles higher, and keep rallying from there. Oops, I just muted myself. And keep rallying from there. So if you were a premium buyer, it actually worked out. I think that straddle, I'll have to price it out accurately, but I think that straddle went out at the 885 weekly, went out at $37 right before the earnings. So that looks like the screaming buy of the century right now in retrospect there.
Yep, I concur.
Well,
I concur. Now you've got Netflix after hours up $33. The 350 straddle went up 45, so it's underperforming a little bit. I wouldn't be shocked to see Netflix actually give some of this away. Kind of interesting to see how things move. But we're seeing a lot of these tech names really kind of blow things up. And it's, one of the things with Google in particular is I think a lot of people got flat-footed in that they assumed bad for Facebook meant bad for Google, and it looks like that's not necessarily or good for Facebook meant bad for Google, and it looks like that's not necessarily true.
No, I mean, clearly it was underpriced in retrospect, but even looking at everything else, $37 for that ATM weekly straddle seems relatively inexpensive given all the movement we've seen in that name.
Yeah, the thing is that was a dirt cheap straddle. It was too cheap.
I mean, just look at forget vol level second, just pure net outlay. You can trade the same straddle in Google, nearly $1,000 stock versus Netflix. Which one's cheaper? Which one is the deal? Netflix, of course, you're right, reporting right now after hours. They closed today. They seem like they had the teeth of their rally during the session. They closed today up 6.5% to 354.
I know, and they're up another 10 after the hours. So
yeah, so if you pick a
mean move.
I guess this came out early during the session. I'm not sure what was driving the bulk of that rally today.
There's this thing called it starts with an F and rhymes with munt-munning.
Yes, that's exactly what it was. It was munt-munning, those old munt-munners. Those guys always causing problems in the markets.
Yep.
Yeah, hitting 390 now. So you're right. That straddle. It seems. It may work out all right, but yeah, I think I'm kind of in your camp. Like, how much of this momentum can they keep throughout the entire after hours into the session tomorrow? They probably will retrace some of that. Hopefully, if you got your premium on, you got it on at a lower level before maybe a lot of the rally happened today, and then you're just watching the gamma work in your favor. Hopefully, we'll see. You never know with these types of things. You put on the end of the day, maybe a little bit more difficult. Mr. Giovinazzi is here, so I won't dive into the myriad intricacies of Zynga. I know that's his favorite name to talk about.
Oh, gosh.
We'll discuss that on another show. All of his risk reversals and straddles and strangles and whatnot. How many contracts of premium has he traded in that $3 name over the past 6 months? That'd be a good little research question to ask. He's making some broker kind of happy out there. what else was catching your eye and lighting up the old tape at Option Pit / Swan today?
Just, aside from kind of the VIX tanking, Priceline keeps moving. And, you've got a few other things kind of blowing up.
Yeah, Priceline, the first to break the 1,000 level. Google not far behind.
I know. Kind of nuts. Tesla actually down today. I didn't think that was possible.
Yeah, they had the temerity to actually sell off for a day.
I know. Well, that's a buying opportunity.
Actually, pretty significantly, down 6% today to 172, down nearly 11 handles.
I know.
That's the biggest sell-off they've had in quite a while.
Decided that making hundreds of millions of dollars off of green credits, it doesn't mean you're good at making cars.
This is one of those ones people always write in with crazy questions about how do I play this name, how do I play that name. This one has been pretty easy for the past 6 months. If you just bought a call or bought a vertical, you look like a genius. You didn't have to do anything else in Tesla. Exactly. There was not much nuance necessary in the Tesla trading.
This is one of those Momo plays that can turn on you very quickly, a la Apple's drop from 700 to 500 in like 2 weeks.
Well, look at the Widowmaker. It's looking pretty good today with the Netflix, but just a year ago, it was trading $68.
I know.
So talk about how these things can cut the legs out from under you.
I know. It's just cuckoo bananas, that stock.
And Tesla, it wasn't that long ago, probably about a year ago on the show, we were debating, I think it was the 20 puts or the 17 puts, somewhere in that range, and whether they were too risky to sell. Now the thing's trading 10x that. So I think the frame of reference has changed, but the risk is still there. And a lot of people seem to forget that. And this is about the amount they sold off, if I recall, after the electric car fire big hubbub. So I'm not sure what the news is today on Tesla, but taking it on the chin a little bit. Maybe the bears are finally getting some of their claws back in. We'll see. They've tried before to no effect.
Agreed.
You can't derail the electric car hype train. I think they've all sat in the car now and they play with that essentially iPad in the front dash and they're just all falling in love. That's what it is.
I know. Oh yeah. So I've driven one. They're really nice. They really are, and they're fast.
Well, they have all that electric torque. They just launch from 0 to 60 in like half a second.
Yes, but they don't. What they lose is where a combustion engine really separates itself is over 100. So where it can produce increasingly more speed, an electric engine kind of maxes itself out.
Well, I do most of my daily driving at around 130, 140, so that wouldn't work for me. The city streets of Chicago are very conducive to that sort of thing.
Yeah, that's meters an hour, right? Not miles an hour.
Exactly. That's inches an hour. There. All right, thank you for that, Mr. Sebastian. That is going to do it for the old trading block, and now we're going to keep on rolling. Everyone get your fedoras handy because it's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, that funky tune means it is time once again to dive into the shady side of the options business and peer into the realm of unusual activity. We're going to kick things off today with, I believe, a newcomer to the odd block, at least one we haven't talked about in quite a while. This is Orbitz Worldwide, ticker symbol OWW. Closing today at, let's see, where do they close? $8.92. This is the name that doesn't usually really light up the charts, doing about 700, 800 contracts a day. Doing about 3x that today, doing about 2,700 contracts. The bulk of that, pretty much all of that, coming in, I think I see a 5 lot and a 79 lot elsewhere. That's really about it. All of it was pretty much in one massive trade. We saw the Nove 10s going up today. Someone gobbling those up 2,572 times to be precise for about 30 cents. This is a strike that has an open interest of about that same amount, about 2,600 contracts. So it seems on the surface like this could be a closing buy. Of course, it is a little bit odd if you look at the timing of this one. These are Nove 10s. They're a little bit aggressive. They're a little bit out of the money right now, so it's a bit of an aggressive buy. Maybe someone's given up the ghost, but we don't have earnings until looks like about 3 weeks out. So if you are specking on some upside, this seems to be a little bit early to be giving up the ghost. So this could be someone perhaps putting on some new open interest here in this name. Senior Sebastian, what's your take here on all this upside call love here in Orbitz?
Probably opening, based on the volume they did, 1,400 on the 16th, and then a few hundred on the 17th and 18th, and then another 2,500 a day. So I think this is a position add, not a subtraction. So I actually think this is opening.
It certainly would seem to be that, because it's an odd time to be taking this off.
Yeah,
if you've been putting it on.
They just actually the real open interest just popped. On the 15th, the open interest on this strike was 920, and then they traded 1,400 contracts on the 16th. So the stock's gone nowhere since. So I just think it's coincidental that it's similar size.
Yeah, it adds up, and that math usually makes my alarm bells go off that it's closing, but I think everything else doesn't really point to that. So listeners, if you're going to play in the home game tomorrow when you listen to this, you can check the open interest for yourself and see what the numbers are. But I think we're both guessing here that probably opening. We're going to go out on a limb and that one. So keep an eye. Someone loving some upside here, and that is opening. Yeah. That's 5,000 contracts open here on that strike.
They got earnings coming up on the 7th. People have watched Expedia, TripAdvisor, some of these other ones. I mean, it might make sense to think that this could be a company that explodes higher.
Yeah, I mean, price line $1,000. Granted, Orbitz doesn't have Shatner, but still, it's got to be worth at least a tenth, right?
Which immediately is problematic for them.
You got to figure out the Shatner premium in that $1,000 and work back from there.
Right.
All right, next up on the old odd block, cover your ears, Mr. Sebastian. I think this is one you love to hate here on the show. We're going to have the iPath VIX Short-Term Futures ETN, a.k.a. VXX, our oft-denigrated name here on this program. I believe you and or Mr. Giovinazzi have referred to this as predictably crappy in the past. I think that's Andrew's terminology. But yes, the good old VIX, everyone's favorite surrogate. When they don't feel like trading VIX itself, they dive into VXX. This is the name that's fairly active. I think we've talked about it before. This is at different times has been the number one exchange traded product by volume in some days. So this name fairly active, doing about 360,000 contracts a day, getting about 100,000 less today. So a little bit lighter from an overall volume perspective. But that isn't really what caught the eye today. It wasn't the size. It was more the activity. It was some interesting paper going up on the March 15 strike. In particular, we had some equal action here on the March 15 calls and the March 15 puts. It looked like it could have been a straddle with the calls going up for $1.55 and the puts going up for $3.80. It could have been a straddle, could have been a combo of buy, put, sell, call. We saw a similar trade going up recently on the Jan calls as well. So, the Jan 15 straddle as well. That went up about 11,000 times or so. So, it looks like at least from initial takeaway here, it looks like someone perhaps hovering in to get short some primo here on that strike. I'll have to check on those calls if they bought the calls or not. But Mr. Sebastian, what's your initial take here on this straddle sale / combo?
We've seen a lot of people, last week we saw this thing way outperform SPY in terms of kind of daily volume and stuff like that and do some crazy things. I think the straddle is an interesting way to play it because, it's a good way to be short, but when this thing really explodes, it can explode higher quickly. So, a slightly in-the-money straddle can really give you the delta you want and much more protection than you think. This is one that we definitely will play at Swan. And at Option Pit, to be honest. So, we like playing that one. Let's just put it that way.
As long as it can be crappy all day, as long as it's predictably crappy, and then you could,
and manageably crappy.
As long as you can work with that crappiness to your benefit, then the crappiness itself is almost immaterial.
It was a much better way to play last week's event than the regular VIX, to be honest.
Why is that?
Because if you wanted to play kind of a pure event risk into everything that was going on, that VXX come the end of that week was all November from like Tuesday through Friday, and gave you those extra days of expiration to see how everything would kind of play out. And so you really couldn't get that from you really couldn't get that from standard VIX, unfortunately. So, yeah, you definitely had some. It was definitely kind of, in my opinion, can have some times where it's the better play. Can, not always.
Yeah, I'm just digging into the time and sales while we're looking at this, and you're right. It did go up almost exactly mid-market, which is always fun to determine exactly what the hell people put on here. But it looks like it could have been an outright straddle sale. I don't know if they necessarily bought the put and sold the call, but it looks like I'm probably would lean more towards the former than the latter. But got to do a little bit more digging into that open interest and the time and sales to see exactly what went on. Meanwhile, we'll keep on rolling with another newcomer to the odd block. This is my favorite. I know I check this every morning when I wake up. First thing I do, get my coffee, fire up my quotes, and there I go. I look at Turquoise Hill Resources Ltd, ticker symbol TRQ. I know everyone else does the same. I mean, why wouldn't you? This is the name that closed today. $4.47, up a penny. So not exactly lighting up the old tape from a volume perspective either, doing about 2,000 contracts a day, which actually for a $4 name isn't bad. A lot of the names we profile do 200 on here, and doing a whopping 16,000 contracts today. So a lot of paper actually lighting up the old tape here in TRQ today. It looks like across the board paper too. It looks like almost every strike, Dees, Jan, Nove had some significant amount of paper out here. So it looks like a lot of interesting stuff. The one trade in specific that we profiled on Options Insider, again, if you want to follow along with all these trades and get more detail, then serve on over to theoptionsinsider.com. Click on the Unusual Activity tab. You can find all these alerts and many more that we don't have time to get to on the show every day. In particular, today we're looking at the TRQ Jan 6 calls. These went up today. We saw a block in the morning going up, being purchased for 35 cents. Then we saw a total about nearly 5,000 going up total on the day. So an aggressive amount of love here on this Jan 6 strike here in TRQ. This is the strike that has about 2,000 contracts open interest. So this is all open in paper, and this is the name in case you're not familiar with them. They are an international mineral exploration and development company located in Mongolia, or at least their principal property is located in Mongolia. So something seems to be afoot out here in the Turquoise Hill Resources, and it looks like someone loading up on some upside. I'm just trying to see if I can see some news. Mr. Sebastian, why don't you give us your take on this while I dive into some news here and see what's going on TRQ?
I don't know. It's a $4 stock. It's the classic special. Sometimes these names just start really heating up, and was an $8 stock 6 months ago is no longer. I mean, 2 years ago this was a $25 stock. So I don't know what to tell you. Maybe it's got its last breath of air before it buries itself. Who knows?
Looks like someone's just trying to get access to a whole bunch of primo out here, because every strike, D4 puts, D5 puts, all had a couple hundred options going, D6 calls, D7 calls, D8s. There was paper on almost every strike for several months. That's odd. Usually a name like this, you'll see someone come in and buy a bunch of upside like we did today. We saw about 4,000 of the Jan 6s, but that wasn't it. We saw a bunch of other stuff going on too, which kind of raises my alarm bells in other ways that something weird is cooking out here. So yeah, this is the one we're probably going to file in the in the to be watched category. I'm going to mark it down right now, listeners, as we're talking, because this is an odd one. Usually these $4 names, it could be all kinds of weird sources of this liquidity, but an interesting name nonetheless, one we haven't profiled before. We don't get into our Mongolian miners very often here on the show. And I'm going to wrap things up really quick here in the odd block today with another newcomer, actually, another favorite I check first thing in the morning. This is China Mingyang Wind Power Group Limited, ticker symbol MY, another odd block special in the $3 range. This is closed today at $3.22, down about 14 cents or about 4%. And it looks like that downside is perhaps was catching some eyes today because we saw people flocking into the March 2.5 puts. Trading those suckers about, looks like about 1,000 times for prices around 60 to 65 cents. Looks like could be someone blasting out a bunch of these puts. Looks like they were hitting bids at those times. So yeah, could be someone.
There.
What was that?
Can't lose there.
Yeah. What's the worst that could happen with a China Wind Power Group name trading $3? That could go down to $2.50 and it could go down all the way to $0. So yeah, a little aggressive. 60 cents. Of course, that is March. You're talking a long way out. So you're talking down to roughly $1.90 at that point. So if you're going to buy it, you got to buy it somewhere. I guess there are worse places to put to work to draw your line in the sand. But yeah, these kind of names, they could be gone tomorrow. And we're never on this show have been aggressive fans of just blasting out tons of puts in names like this. Granted, it's better than working a limit order right now, so that's what you're looking to do. I guess there are worse ways to do it, but overall, yeah, never a huge fan of these. But still, interesting name. Someone perhaps drawing a line in the sand here on good old China Mingyang Wind Power Group Limited, ticker symbol MY. It's a great ticker symbol, MY, M-Y. That's a good one. So that's worth profiling just for the ticker symbol alone. All right, and now, Mr. Sebastian, here's what we're going to do. Because Mr. Alex is not here, we're going to keep on rolling right onto the Express Block, and you're going to play a little bit of a guessing game. How about that?
Okay.
All right, here we go.
Sounds good.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and as I mentioned, the Viceroy is on vacation, but don't worry, listeners. We have a little Express Block fun for you. I know in recent shows we've done some guessing games here on the old trading patterns, and it's been so interesting. I thought we'd do it again. Unfortunately, Mark's the only other guy on the show today, so he gets to be the victim. I was hoping to open this up to the full panel, but he gets to have the brunt of the fun. I can't play, of course, because I'm seeing the answers here. We're going to kick things off. I thought we'll keep it in the family, as it were, and look at some of the names we talked about today in the odd block and see what other underlyings the OX clientele is trading right now. So we're going to kick it off, Mr. Sebastian. Get your guessing hat ready. We're going to kick it off with your favorite predictably crappy name. If I were to tell you right now to guess, what do you think OX customers who trade VXX, what other underlyings are they also trading? What would your first guess be?
FAS.
Try again, sir. You get 3 strikes.
GLD.
Surprisingly, no. I might have thrown that one in there too, but no, that one is not in there. 2 strikes, and you one more strike, sir.
Apple.
That's kind of the low-hanging fruit, literally. But no. If you went Facebook, you might have been a little bit better. No, the top 10 underlying correlations here for the OX clientele for VXX. Number 1 is XIV. So they're staying in the vol realm. I figured you'd jump on that one right away. Then the E-mini D's Nasdaq. That's interesting. And then a bunch of short and just ETFs on the S&P. So the ultra short SDS. You got the SSQ, ultra short VIX. So the UVXY. These people are getting into some interesting products here. Then, of course, the Dow Ultra Dow 30, and then you get into some of the retail heavy names like Facebook. Then, of course, we have everyone's favorite piece of crap. I can't believe everyone trades this thing. Is TVIX still doing 4 million contracts a day? 4 million shares a day. That's
people love to hate it.
That's disgusting. That name should be delisted across the board. Instead, it still trades. That's like a giant honeypot or some sort of giant booby trap for investors.
Giant honeypot. Isn't that what they call you sometimes, Mark?
Exactly. That's when I wear my Winnie the Pooh costume for Halloween. Check it out in a few weeks. You have your chance to see it here in Chicago. Then, of course, the Dow Jones Mini and a small cap 3X shares TZA to wrap it up. So interesting names. Maybe we'll do a couple of these little ones. It might be kind of weird. Let's do a bigger one first, just to let you have a chance to redeem yourself here. We'll start off with Orbitz.
Okay, I'm going to say Expedia.
A good guess. Let me see if they're on the list. They are not. Strike one, sir.
TripAdvisor.
No. Now you're staying in the targeted area, and you're getting screwed again. You went farther afield before you did.
I know.
Just pick one of the retail favorites, and you'll be all right. I'll give you a hint. Not the one you picked last time. The other one.
I'm gonna go Apple.
The other one.
Facebook.
There you go. Facebook.
Facebook.
There you go. Number 2 would be Facebook. Number 1, Aeropostale.
Aeropostale.
There you go. Number 1, yes. And then Phoenix New Media Limited. Jinx Solar. They get into the solar, these people. They trade Jinx Solar and Solar City are 2 of the big ones on there. That's weird.
All right. Well, there you go. Well, yeah. How many customers were actually trading Orbitz today from Options Express?
Oh, yes. I'm sure the sample size is very low, but still.
Yeah. Come on.
Nonetheless.
It's one dude, so it's whatever he trades.
You're just mad because you've guessed Apple twice now.
I know.
And been completely shut out.
Retail traders are smartening up. It's pissing me off.
Been completely shut out, which is odd. Usually you can guess Apple.
Maybe I start going long Apple because there's no retail traders in it.
You can guess Apple on pretty much every name, and usually it's in there somewhere. I'll give you your chance. You can do one more of the odd block names. Both of them very little, so it's going to be hard.
We're going to add this game in as a regular segment.
I kind of like this game, actually. Yeah. I've been talking with OX about making something into this. It's kind of fun. We'll do one more. I'll give you a chance to redeem yourself. Actually, no, tell you what. You pick the name. You pick the underlying, and I'll put it in.
All right. JCPenney.
Okay. All right. You're going to like this one. Go ahead.
BlackBerry.
What? No. I just gave you the clue of all clues. I said you're going to like it.
Apple?
Yeah, there you go. Number 2.
Right.
There you go.
Hey.
Third time's the charm.
Apple, and is that number 1?
That's number 2.
All right. Number 1 is because people just killing JCPenney are probably all the people that are into momentum. So I'm going to say Tesla's in the top 10.
Number 3, yes, number 3. Well done, sir. This one's this is like all the retail favorites lined up. I bet you can guess number 1 if you guess the other 2.
Aeropostale?
Yes, across the board.
Was
number
it
1
really?
correlation. No, I'm kidding.
Oh, all right.
It's the other big retail favorite.
Oh, Sears?
Facebook.
Oh.
Retail trading, not retail shopping.
Maybe
I'm confusing you in that sense. Then we have number 4 is
Zuckerberg.
Number 4 is FU. Number 5 is VXX. So there you go. And then number 6, XIV. Number 7, UVXY. That's the ultra short VIX, in case you don't know that one. Then number 8 is the E-mini Dees again. And then RDN. Remember this one? Our famous call selling on the 10 strike back a couple of years ago.
That guy that used to just buy calls. You know what? He's actually, if he kept buying calls,
he's doing all right now. This thing's trading $14 now. So this thing has gone from $2. We should probably profile this one on the show again. The $2 to $14. This thing is just all over the freaking map. So from an options perspective, could be an interesting one. And then finishing it up with the Dow Jones Mini Dees. So there you go, listeners. A little bit of some trading patterns guessing game. Next time, Mark, we'll do it with a little bit bigger panel so you don't have to be the only one bearing the brunt.
Well, we got to turn this into a regular game. Maybe
I like it. I kind of like it. Yeah, maybe that'll be the segment.
Every couple of weeks, we get everybody on. We'll do this at the live show.
Yeah, I was just going to say, we do it at the live shows. It'll be great. I'll make some little flashcards. It'll be fun.
All right.
And then we can spread the shame.
Well, we need to tell you what, and we can have my new assistant be like the reveal girl.
Yes.
Wait a minute. Well,
I don't know if
maybe
that'll
that
work.
didn't sound right.
I don't know if that'll work well on several levels.
Joanne, you do not have to be the reveal girl.
Including that it's an audio program. But
there's
other than that,
there's a better way to express that.
She may have to have a claim with the HR division now after that. But
Netflix back below 390. So.
Well, there you go. Giving up the ghost.
Possible.
Premium buyers beware. All right. And that's going to do it for the Trading Patterns guessing game. When in doubt, guess Apple, guess Facebook. Usually you're right. Didn't really work out that well for Sebastian today, but maybe next time he can redeem himself. Now we're going to keep on rolling. Right on. We still got a few more minutes. We've got just a mountain of listener mail, so we'll see if we can chip away at that a little bit in the old mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, Mr. Sebastian, put your listener mail answering hat on because we got quite a bit of it. First off, I'll give you a bit of a respite here. The first one's more of a comment, comes from our website from the Post guy, also known as Phil. He says, he wrote a post titled, "Not surprised by the download volume. Dear Option Block crew, I'm listening to the latest episode and hearing Mark's comment over the amount of downloaded hours of Option Block. This doesn't surprise me at all. This show is one of the very few sources of excellent option and industry content that I honestly cannot believe is free. The balance of viewpoints between each panelist brings us a unique perspective that gives us great actionable information. For myself, I work full-time and run a small side business. I managed to blow up an equity account in '08 and came to options as a way to balance the amount of risk to the market. I find myself timing my evening walks to the length of your show content. If that is any indication of how this listener values your programs, when will the store be open so that we can purchase our own fedora hats? Regards, Phil." Well, there's some love for you, Mr. Sebastian.
I know, I like it.
To open up the listener mail block.
I've spoken to the Post guy here and there in the past, so
that handle sounds kind of familiar. He must have posted, as being the Post guy, he must have posted before. But thank you for that outpouring of affection, Mr. Post guy. Don't worry, listeners, they're not all like that. Just opening it up with a nice, fun one. But yes, and thank you for the kind words, and we hope we don't make your walks go too long. And yes, the store, we're working on it. I'm like that singer in that band you like where you keep wanting them to come out with a new album and he's busy with all these other side projects and he keeps screwing up these things. That's me. I got all these other things going on, including what you heard at the top of the show here, the Options Alliance event, taking up a lot of my free time, so we haven't had a chance really to launch that store, but we'll get it going certainly. Maybe we will have some Option Block inspired fedora hats. Not a bad idea. I like it. All right, next up we have a question here from Jeremy, and he writes, "Hey folks, great show. Keep up the great work. Now that we have seen the success of Weeklies, do you think we will see dailies? Or do you know how one could get exposure to daily expiration on such products as SPX? I noticed the CBOE has asked permission to start dailies, but I have not seen any products. I would expect the interest in such a product would be popular, as the edge one might need to achieve to expiration can be smaller. But this is a long sentence. But the end result compounded could be greater over a period of time if there are more opportunities to trade that position. Cheers, Jeremy." Well, that's an interesting one, Jeremy. We touched on dailies in the past a lot. The CBOE has filed for some stuff. In the past, the exchanges have been somewhat reticent about diving into that. I've mentioned that with a lot of the exchange heads, and they all kind of bristle a little bit when I bring up the dailies, just because there still is that connotation of dailies kind of falling into almost the binary realm and kind of getting away from the hedging aspect and really getting more towards the completely speculative side. And if you know anybody in the options biz and the industry in particular, they're very, very concerned about that. So they've been slow to embrace that. But I agree. I think eventually we will see those filing. It's just a matter of time. I think the full industry has to get behind it before we really see some momentum on that path. And right now, doesn't really seem to be there. And then how can you get exposure to daily expiration? Right now, the weeklies have made that pretty easy because you can trade weeklies, particularly if you're looking at some particular event. I'm assuming you don't want to buy dailies every day and roll them. That would be insanity. But if you want some specific events, you can use the weeklies for that right now. It's a pretty good proxy. That's about as close as you can get. If you're worried about premium, we've talked before on this show and many other shows about legging into some calendars. Now that they list the full strip of weeklies, you can always, buy week 3, sell week 1, etc., and mix it up a little bit that way. So you're looking at ways to finance some longer-term premium. Or if you just want that very short one-day exposure, then pick up a weekly with a couple days left. That's a great way to hedge a very near-term event. That's all you really want. Mr. Sebastian, what's your take here on the daily options?
I don't know that I could add a lot more to what you just added. The CBOE wants to add them. Not sure if that's a great idea. But yeah, I agree. I think, what do you need a daily option for when we've got these weeklies that basically have that anyway? I mean, if you're really just looking for 100% gamma, there are other ways to hedge off your vol exposure. So I don't know. I think a daily option is a little too into the weeds.
I think we will get there, though. I think the people, if for no other reason than exchanges, they're reticent, but they do see the action in weeklies. They're going to want to add to that, and they think dailies is the next step. So some biz dev guy somewhere at some exchange will finally make that decision, and it will happen. We got a lot of international listeners writing in this time, too. I'm going to jump to one of these here. Put your listening hat on. This sounds like a crazy one on the surface, Mr. Sebastian, but when you get to the end of it, you realize it's kind of more of a general question we touched on a bit before. This question comics in from Michal, I'm not sure if I'm pronouncing that correctly. He writes, I trade index options on the Indian CNX Nifty Index, and the ticker symbol there is IND. 2 weeks ago, with the index at around 5,300, I had sold the 5,800 strike calls expiring on the 26th. This is back a little. This one was lurking on our website, so I didn't get to it till a little bit later. I apologize. This is back, at the end of September. He wrote these at the end of September, he's writing here. He goes on to say, I did not sell the corresponding puts immediately as the market had run up over the past 2 days, and I thought I could get a better rate if I waited a day or two. Since then, the market has run up some 11% and is currently trading at 5,900. 2 days ago, at around 5,750, I bought back the 5,800 SEP calls and sold the same number of the 6,000 strike OC calls expiring at the end of this month, so actually the 31st. They're a calendar month option. Since then, the price of the October calls has almost doubled. Would appreciate any ideas on how to get myself out of this mess. Thanks, Michel. I think the specifics of the nifty levels aside, which I don't think either Mark or I are watching that closely on a day-to-day basis, but this gets back to a topic I think we touched on this show in the past, and Uncle Mike has done some strategy blocks on this. This is the whole, writing calls, whether they're covered or uncovered at some particular strike level, and then you blow through that strike. What do you do next? And that seems to really get a lot of people into a tizzy when that happens. We've said many times on this show, if these are covered calls and you blow through your strike, it's actually not a bad thing. You kind of want that to happen. It means your strategy is actually working. If it happens time and again, maybe you pick a little bit better strikes so you can capture more of that appreciation. But if it happens every now and then, not a big deal. This sounds like he's more in the writing naked calls realm, and then it kind of burst up. And now what he saw is kind of the inverse of the question we get a lot on this show. Usually people write in and say, I bought an upside call, the underlying rallied, my call essentially lost value. How did that happen? He's had the inverse. He's written the call, and the calls have ballooned up. Sounds like there was some upside panic and upside fear lurking out there in the Nifty, and he kind of got bit in the pants by that one. Mr. Sebastian, what do you say to your mentees, to your clients, when this scenario happens, when they write calls? It sounds like naked, but it could be covered as well, and then the underlying blows through the strike. What's your typical response for that?
That's just classic lack of proper risk control. If you're just naked selling upside calls, you've got to have a management plan in order to manage something like that. And, I much prefer my clients use things like front spreads and different trades like that than just a straight naked call, or at least a strangle. You need to have some sort of offsetting volatility, because even if the market rallies and vol comes in, if you get kind of this crazy market rally, you're going to have all kinds of problems. So, this is just it. You've got to really understand the real principles of risk management. Really important.
Yeah, there's a reason that your brokers hold aside so much margin when you write these naked out-of-the-money calls or naked calls of any fashion. It's because they don't want this kind of thing to happen and wipe you out. And unfortunately, it seems like it's coming to bite you, Mr. Michal. You could, of course, roll again and try your luck again. You're going to take the hit on those October contracts, but maybe you could make it back in November. But indeed, what Mark said is kind of spot on. If you're writing naked calls, you really need to have some sort of plan ahead of time for when this happens. And it sounds like what happened to you is the underlying didn't even have to rally through the strike. like just the anticipation could bid up that call wing, and you're getting bit on that as well. And it sounds like that's what happened to you out there in those nifty calls. So either way, you need to be prepared for the underlying to move, for the call wing to catch a bid, an upside crash, as we jokingly used to refer to it in the SPX, and cause that call wing to get bid up and those calls to get bid up, regardless of what's going on in the underlying. A lot of interesting ways you could get burned in that. Either you have some upside kickers to mitigate your losses, or perhaps you keep rolling, or you do some sort of risk mitigated strategies like we talked about here, the vertical strangles, iron condors, things like that, where you know going into it exactly what your max could be in a worst case scenario. That's why those strategies are so attractive to a lot of people. They know going into it exactly what in most scenarios could be their best and worst cases. All right, we have a lot of other mail coming in, including some great, crazy international ones about Greek warrants. You guys really have been sending in some great questions. Keep it up. We don't have time to get to those today. We'll get to those maybe on the next show. Have some time to study the Greek warrants market ahead of the next episode. If you want to join your fellow listeners, you can do it a lot of different ways. You can, of course, surf on over to theoptionsinsider.com, or find us on Facebook, facebook.com/theoptionsinsider, or on Twitter, twitter.com/options, or find us the old-fashioned way, questions@theoptionsinsider.com. Just put in the subject line the title of the show you want your question answered on, and we'll be sure to route it accordingly. So great questions. Keep them up, and now we're going to roll right on into the final segment, Around the Block.
Around the Block.
All right, we touched on the top of the show that it seems like everyone's kind of playing the wait and see game right now. They don't mind getting short some gamma, buying some calendars, buying some vol out in February and March, and don't mind shorting the near term, because look at the market today, essentially unched. No one really knows what's happening in the near term. They're not afraid of too much significant near term movement, but they're catching a bid. They're planning to catch a bid, I should say, in some longer term vol and positioning accordingly. Of course, coming up over the near term, we do have some action, including the big, call it what you will, Super Thursday, the big earnings palooza day. Coming up on this Thursday, the 24th, we have just a ton of names announcing, including a lot of the ones I know you guys love to follow, given the names we're seeing coming up on the trading patterns over there at OX. Starting off with, we got Southwest reporting this Thursday, of course, ticker symbol LOVE. We've got Ford on Thursday. If Andrew was here, his favorite Zynga, also reporting on Thursday. We got United Continental, ticker symbol UAL, reporting on Thursday. Microsoft, a name that's we've said many times on the show recently, is showing some signs of life again. It's getting some vols, getting some movement. It's out of the doldrums that it kind of languished in for the past decade. So Microsoft perhaps planning another move to the upside, or some vol in general coming up on Thursday. Of course, Amazon, always a big mover. That's also announcing on Thursday. And then, of course, the following week on the 28th, that little fruit company everyone loves to trade and talk about, Apple crossing the 500 level again recently, closing today at 521. They're reporting on the 28th. Anything else outside of that extreme list of earnings that you're looking forward to for the rest of this week, Mark?
You know, we've got non-farm payrolls tomorrow morning, and just a glut of economic data as the federal government tries to catch up with, you know, their whole economic shutdown. So I think there's lots more room for volatility than a lot of people realize, and I'm not so sure that I would want to be selling at 13 vol over the next 30 days with two non-farm payrolls in it. I don't know about you, but has that ever seemed like a great idea? You know, as I look at non-farm payrolls coming up, one of the things that scares me is I'm really having trouble in my head figuring out what would be considered good and bad in terms of reports. You know? Yeah,
we're in that weird. Well, it's weird alone to first off have a non-farm on a Tuesday and then have another one in the same expiration cycle on November 8th. So that alone is weird. And then once you get beyond that, you're right. What is the number that even makes sense in this post-shutdown environment? I don't even know. I know everyone's kind of playing that same game. It seems to be that lack of information, that lack of insight really is weighing on new home sales and everything else kind of across the board. None of these numbers are really making sense. I think it's going to take – they're going to announce the number on tomorrow, and then they're going to see a lot of probably back and forth in the immediate minutes afterwards. Everyone kind of tries to digest it and says, what the hell does this actually mean?
Yeah, I think we'll finally get an idea of what the market is looking for in terms of good and bad out of the market on that kind of report. That'll maybe be the one that gives us the info.
Yeah, that's why I know people are bidding up some longer term vol and liking that calendar spread, but I don't know if I would be that aggressive on the short gamma here with all this stuff coming up.
No, I mean at a 16 or 17 vol, yeah. When you get beyond that, then I think you're dealing with stuff that's maybe not such a great idea.
Yeah, so even though the sell-off has happened in the broader vol, if you're looking at some of the individual names on the monthly contracts and saying, wow, these are really still juicy, factor in you got 2 non-farms in that cycle, and one of them's on some weird date, and the numbers are all going to be kind of screwy. So factor that in when you're hitting bids left and right and blowing out premium. Maybe you keep your powder dry and you wait for some good levels. That's probably should be just general advice for the show.
I think that I don't think that I was looking at whether I wanted to sell something all day, and I came to the conclusion that the answer was no.
And that's often some people are afraid to do that. They're afraid to not trade. They think they're missing something. Yep. But yeah, I think often if you keep your powder dry, I say that a lot on the show. People say, "Oh, it's a cliche," but it's true. Sometimes it's better to do nothing than dive in without getting all the reward you need to sell something, or not having all the information you need to really process it. And sometimes, yeah, it's so tempting. I see where you are. You're working maybe a level, and then you see it's getting close, and you're like, well, it's going to close soon. Maybe I drop it down a little bit, take a little bit less than I want. Sometimes it's harder to resist.
Agreed.
All right. And speaking of resisting, listeners, you'll have to resist more Option Block, at least till our next show here on Friday. And on behalf of Mark and, of course, myself, we want to thank all you guys for listening. And really quick before we go, Mr. Sebastian, what is cooking there at Option Pit and indeed at Swan Wealth Advisors?
Well, Swan, we're involved in lots of stuff. I don't know if Randy's talked too much on the. Here's what I'll say: listen, if you like this show, you should listen to the Advisor Option. I think you'll get some good info out of that, and that'd be what I'd point people toward. And then in Option Pit, a little bird told me that on December 7th, the Option Pit and the Option Insider will be launching its first option trading primer. A 4-hour seminar. Look for information to come out probably this week, folks. And it's going to be a really a pretty neat thing.
Yes, we are joining forces to educate the masses yet again. People have been asking us all the time. We did the big event back in May. When are we going to do more? When are we going to do more? When is the educational train going to keep on rolling here at Options Insider World? I'm pleased to say that the educational series is kicking back into high gear. We're joining forces here with our partners over there at Option Pit to put together some great epic 4-hour extravaganza. Going to be on Saturday, December 7th. Stay tuned to your podcast dials or to our collective websites. You can see exactly what the details are. We haven't worked out exactly yet where we're going to hit on all those different topics, but don't worry. It's going to be great. And for all you guys who wrote into the last one we did saying, hey, it sounds great, but we can't make it to Chicago, don't worry. This one's going to be streamed online so you can check it out. So you don't have to hop on a plane. I know a lot of you did last time, and we appreciate it, but we're going to make it a little bit easier for this time for you guys to join us. So keep your calendars open on the afternoon of Saturday, December 7th. We'll have some good stuff cooking for you and more information to come. And on behalf of Mr. Sebastian and, of course, Uncle Mike, who couldn't make it today, and Alex, the Viceroy, we want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing, and, of course, for sending in those great questions. Some of them, they're getting crazier every time, so keep it coming. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.